Hello friends, this is Vijay here. Stock market, it's an ocean of opportunity for investment. Every new investor will come to the world of stock market to get multi-bagger return. But when it comes to investing into stock market, there is no fixed formula to succeed here because we cannot only invest based on the company fundamentals, company business. We cannot only invest looking at company profit and loss statement because one government policy can change the entire market sentiment. One global event can change the entire market sentiment. That's why when it comes to investing into stock market, more than our knowledge, more than our intelligence, our emotions are very important. Our attitude is very important. I would like to give two examples how our emotions are very important when it comes to investing into stocks. We all know Sir Isaac Newton. He's a great scientist, great mathematician. He discovered the law of gravity. During 1720, he has invested a X share at 180 level and he booked the profit at 360 level. He got 100% profit. After a few months, the same stock it reached the levels of 680. In that time, Sir Isaac Newton he was not able to control his emotion. What he did is he re-entered the stock at 680 level and he exited the stock at 175 with a loss. Being as a great scientist, he was not able to control his emotion because when it comes to investing into stock market, more than our intelligence, our emotions are very important. Our controlling our emotion is very important. I would like to give one more example. We all know Albert Einstein. He's a great scientist. He invested his entire Nobel Prize award money in stock market. However, he lost his all money when market crashed in 1929. Sir Albert Einstein, Sir Isaac Newton, both were intelligent people. They were good at science, good at calculation, good at mathematics. Even though they were not able to succeed in the world of stock market because getting success in the stock market, it's more than our intelligence. Our emotions are very important. Today, I would like to discuss about the top 5 emotions which will stop us to succeed in the world of stock market. The first emotion is fear and greed. Fear and greed are the most important emotion which will stop us to succeed in the world of stock market. Warren Buffett says that be fearful when others are greedy. Be greedy when others are fearful. He says that you must buy when everyone are selling. You must buy when everyone are selling. But when it comes to investing into the real world, it's not possible for all the investors. When market started to fall, we will become too fearful and we will not invest in that time. We will start investing once market started to move because that is the time of greed. I would like to give one example. During the COVID correction, Nifty has corrected from 12,000 to till 7,500. In that panic situation, very few investors were able to invest in that time because that is the time of fear. Once Nifty started to reach 15,000, 16,000 mark, then we started to invest because that is the time of greed. That's why when it comes to investing into stock market, we should not be too greedy when market in the bull phase. We should not be too fearful when market is in a bearish mode. The second emotion is investing based on the tips. Every new investors they will invest in stock market based on tips and herd mentality. My friend is investing, my relative is investing, my neighbor is investing, even I need to invest. Once they started to sell, even they will also start selling with a loss. This is the most dangerous emotion which will stop us to succeed in the world of stock market. Instead of that, what we have to do, we must learn everything. We must do our own research. Then only we can stop using the tips. The great investor Benjamin Graham, he says that investing into the knowledge which will pay you the best return. The third emotion is always searching for the multi-bagger return, always chasing the return and investing into penny stock. Every new investor when they come to the world of stock market, they have one expectation, that is multi-bagger return, and they want to become rich in very short time. But all the retail investors, they are expecting multi-bagger return. It's not possible in stock market, because stock market, it won't go always up. It will fall also. But when it falls, it will fall very badly. But one thing we must understand, if you get a decent 15 to 20% return over the next 10 to 15 year, you can create a huge wealth. So we are thinking about 50%, 100% return. So the great investor Warren Buffett, he has got annual return only 22%. Even though with the 22%, he is able to create a huge wealth. Expecting a multi-bagger return always not possible in stock market. Fourth emotion is lack of patience and discipline. Patience is one of the most important emotion which will stop us to create wealth in stock market. It's been a more than a year. There is no return in the stock market. There is negative return in the market, as market is in a correction mode. Every retail investors, they will find it very difficult. They will find it very boring, and they will exit from the market. Patience is the most powerful weapon which will reward you in long term. Warren Buffett says that patience is the main key to succeed in the world of stock market. That's why he's able to create wealth in stock market. And patience is the one thing which will differentiate the winners and losers. The fifth emotion is lack of conviction. Conviction is the one important emotion which will stop us to create wealth in long term. In stock market, corrections are part of every equity market. If you have a right conviction during the every market correction, you will buy more, you will grab the opportunity. If you don't have a right conviction, you will get panic and you will start selling and you will exit from the market. That's why conviction will play very important role when it comes to investing into stock market. I hope you enjoy this video. If you like this video, please give a big thumbs up. Thank you.